Hello, this is Patrick with Chart Built Wealth, Profitable Investing with Technical Analysis. I just recorded a YouTube video that was too long, so this is my second take, and I got to get it done in less than 15 minutes. And I'm trying to cover all the positions we've talked about. So here we go. Let's get into it. This is my take on the overall market. The market was down pretty hard today. And if you remember, at the end of last month, we had I'm not making calls on the S&P 500 here, by the way. I'm just giving you a backdrop for the stocks and the other things that I've suggested to you, just so you have that and as a context. So last month, we had a bearish engulfing pattern on the monthly chart. Each one of these candlesticks are a month long. So when you talk about a monthly bearish convergence, it matters. It's a big deal. And you'll notice that we've had like a 4+ year negative divergence as prices have hit higher highs. This has hit lower highs. It's flashing a caution sign. Beware of a change of trend. The only similar one that I've seen in my lifetime was back going into the 2001 peak. So this is actually larger. So in the back of my mind, long term, I'm pretty bearish. I think there's going to be some significant shakeout at some point in time. I'm not calling that now, but this was meaningful. And here on the weekly chart, so this goes back 3 or 4 years. Each one of these bars represents a month of price action. And you can see we even have a negative divergence on the weekly chart. On the daily chart, this goes 6, 7 months. Today we had a bearish engulfing pattern. It's not a big deal, but it gives you a little bit. It is a big deal in that the size of it actually, and the fact that it could give us that, and the weekly bearish divergence could give us a couple of weeks of a tough market. And so I want to again just put that into context for you. So let's get into the different suggestions that we've had now that we have this backdrop. So MSOS, the U.S. Cannabis ETF, this has had hair all over it from day one. We did make some money on the spike, and we've had some other fits and starts, and it looks like we're consolidating in a triangle within a bullish channel, upward sloping channel, and a possible inverse head and shoulders, left shoulder, head, right shoulder. So this is a weekly chart. So this doesn't really matter, this slight break. We got to see what tomorrow's close brings. If it's down below here, then that's not good. It's broken our bullish channel. It's broken our symmetrical triangle. It's broken our confluence of moving averages. And this is a daily chart. So we're just looking at this section here, this fits and starts, which happen in triangles, which make it very difficult to trade. And so here's the triangle. We had a break today. Here's our stop. We broke it by a tiny bit. No, I didn't sell any when the market, when it was down. MSOS was down 8% today. Also, we have a bearish rainbow convergence where all the moving averages are coming back together. So tomorrow, like I would on any day, I actually bought a small amount today, a very small amount because of the stop. But whenever things are down, I'm buying a little bit. And then when they go up, I'm going to sell. And especially with this bearish rainbow convergence, if MSOS was to have a big day tomorrow, I'd sell quite a bit because for the next leg up to start, it's got to get through this confluence of moving averages. So that's my strategy there. Southern Company talking about utilities. So here's the symmetrical triangle, the big breakout. And here's where I went neutral because we were overbought. Prices went higher. This is a weekly chart, so each one of these bars is a week. And it's it's possible we get a weekly bearish convergence tomorrow with the weekly close if it doesn't rally substantially. And so, I want to get involved in utilities. We have a $90 price projection. Utilities are defensive in nature, so generally they do outperform the broader market when the market gets tough. So I want to look to get into this. So I will be looking on weakness. I will be looking, if we don't get a weekly bearish convergence, I will be looking to add on any kind of a weakness. Whenever it's down, I'll buy a little, and up, I'll sell a little less. Down, I'll buy a little more. Up, I'll sell a little less. So that's the way that works. China. So China went neutral on China at about 27.5. It overshot that to the upside, and now we have some downward movement. A couple things I want to point out on this chart. According to the Elliott wave theory, we reached our inverse head and shoulders price projection at 27.50. That's one of the reasons why I sold. The reward to risk was no longer that attractive. But in the Elliott wave scheme of things, we have a one, a two, a big third wave. Thirds are powerful. That's what we saw. And now we're getting a fourth wave correction, and then we should have one more push to higher highs. Remember, I think China has the potential to be a multi-year bullish market, so I want to be involved. And when we got up to here, I probably sold half of what I had, and then every day it was up, I'd sell a little bit more, sell a little bit more. So I probably have a third left, a little more than a third left of what I had. But we have no negative divergence on our RSI. The LA wave count suggests it's a fourth wave. So the last 2 days, I've added very small amounts back in, and I will start looking to go a little bit bigger as we get lower prices here. And so let me give you context. This is a daily chart. Each one of these bars is a day. Here's the intraday. Each one of these things represent 2 hours. And you can see on the 2 hour chart, which goes back a month, we're getting ready to get a bearish rainbow convergence, probably in the first couple hours of trading. So maybe we see a down movement early. These lines touch. I'm going to be buying that dip somewhat aggressively. And that's the wrong word, but I will be buying larger portions than I have the last 2 days, because when that convergence happens, either prices are going to pause until the moving averages move down and test them, or the type 2 convergence is prices come back to that convergence, which would be up by 28, 28, 25. That's what, 4% or so. So I would buy, and then when they got back up to this convergence, I would sell what I bought, because until it breaks through this convergence, we're kind of in a free fall. But you can see we're getting overbought. So tomorrow I will be buying more on any weakness. Copper. So here was our symmetrical triangle. Here's our breakout. Our price projection was 510. We got to 506. I sold half of my position, and prices went higher, and now they're going lower. And this is a very volatile commodity, so you got to be really careful here. And I could tell by all the looks at my YouTube video on copper, there are several that I've had, all the hits on it, because it's very popular, because people are all wound up with copper and AI and the relationship and all that nonsense. So anyway, you can see we got really overbought. Prices are coming down. It's a similar situation to China. On the intraday, we're getting ready to have see if I had that. Nope. We have a bearish rainbow convergence on the 2 hour chart here too. So I'll be buying some tomorrow, and then seeing what happens. But every time I have a big down day, I'm adding small amounts. So I've been buying small amounts, just touching it every day. Gold miners, love the pattern. This huge inverse head and shoulders pattern. We're still in the black here. I just want to show that this chart is still intact. Our stop is in good shape. And I bought a little bit more today. If gold is down tomorrow, I'll do the same kind of strategy. And here's the 2 hour chart. Each one of these bars is 2 hours. You can see we're going to hit a rainbow convergence tomorrow on any kind of down movement. And so tomorrow I'll buy more than I've been buying the last few days. So that's the strategy there. I'm still bullish on these things because of the big charts, the big patterns that we have. Marathon oil is still in good shape. This is really attractive because we're right near our stop level. You can see what the upside is. We're looking at from this place about 60% potential upside. And I think it's like 4% or maybe a little less on the downside. So I think energy has become out of favor as people have gravitated towards the metals. People chase the hot dots. Now, this is kind of flying under the radar screen where it was very hot at the beginning of the year when it went up 50%. So this is where I've been nibbling the last week or 2 weeks, 3 weeks. So building my position larger and larger because I don't buy big positions at the onset. And here's their 2 hour chart. Um, we had a rainbow convergence here. It was a type 2 convergence. Prices came back up to the convergence and failed. That promised a new lower low, which we got. And we got a bullish. So again, I'm buying here. I'm selling some into here. And now that prices have gone down, I'm trying to get this position bigger. So I've been buying bigger. And we got that bullish hammer, not today, but yesterday. I really like that. That's a reversal pattern. So again, I was buying pretty good amounts yesterday and today, trying to build my position, and we have a little bit of a positive divergence so far. And here's Abbvie. And again, all these things, utilities, healthcare, they're defensive in nature. So in a down market, they should outperform. Hope so. And again, we had a big up week last week after buying it, and now we got a big down week. So we haven't really, I think we might be in the red a little bit, but our pattern is still intact. It's suggesting 195, and we're at 158. So we got a lot of upside, and here's our stop. TLT TLT talked about this a couple days ago. You know, we had the big head and shoulders top 3 years ago, suggesting it was going to go down 22, 23%. Called that pretty well. And now I'm not calling the bottom for fixed income, but I am seeing the potential inverse head and shoulders here. And I'm also seeing a rainbow bullish convergence. So the moving averages aren't on top, squeezing prices lower. They're underneath, hopefully generating some support. And this little pattern, if we're able to break above, let's call it 93, we got about 10% upside and a 3.84 dividend. So I like this. It gives us diversification. I'm up to about 10% in Treasuries right now after being down to 2% or something. So been building this up. Thank you for watching. Please like and subscribe. Please subscribe. Have a great trading day tomorrow. I hope some of this made sense. Wanted to get my thoughts out to you. Thank you.